Hello traders, and welcome back to my channel IPDATrader. Now in today's video we're going to be taking a look at a simple smart money strategy that you can start implementing today to potentially profit in the forex market. It implies you to know about the daily highs and lows. It implies you to know about the ATR, which stands for average true range tool, which I have previously made a video upon. So if you're not sure what ATR refers to, you can always go back to that video because we will need that indicator to use this strategy effectively. And this strategy is actually rather simple. It requires a few steps, which we're going to be covering after the introduction. So once again, guys, if you want to learn how you can start to implement a mechanical strategy that you can just simply follow and wait for it to appear, then you might want to watch this video till the very end because it's going to provide you with all the bits and pieces that you need in order to make this strategy work. So we're going to be heading over to the drawing tool as I go ahead and explain this strategy for you guys. So without any further ado, let's get started with today's lesson. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, IPDATrader. IPDATrader is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good and not many other brokers will do. So once again, massive thank you to IPDATrader for sponsoring this video, and now into today's lesson. Enjoy the video. Alright everybody, so here we are on the drawing board and we're going to get started with the explanation of the strategy. So simple, smart money concepts, strategy. It's actually very, very straightforward. So your step number one is going to be mark out daily high and daily low, which is going to provide you with a framework. If not in range of ATR, closest liquidity pool. And I'm going to be explaining this right here, right now, before we head any steps further into the strategy. So the very first thing that you're going to do, guys, is simply go to the daily time frame. Let's imagine this is a bearish daily candle. And what you're going to do is denote the previous daily high and low of the fully formed candle. So as an example, let's say we're trading on a Wednesday. Wednesday is looking as such on the day with little to no top wick yet. Well, then this is not the candle you want to denote your daily highs and lows on. Sorry, not that one. Actually, this one. You don't want to do anything with the daily highs and lows on the current candle. That's not yet fully formed. As a matter of fact, you want to denote the daily candle that has been already formed and is already closed. Okay, so the previous fully closed and formed candle, you're going to be denoting your daily candle high and your daily candle low. That's your first step. Now, if it's not in range of ATR on a day, let's say as an example, ATR on a day is sitting above structure, in this case above the daily high or below, right? We have ATR high and ATR low. Then you're going to be using this as your reference point to frame a POI around that level, okay? Because these levels tend to bounce pretty well. So you're going to be using that into your advantage. Once again, if your ATR it's not in range of the daily candle high and low, then you're going to wait for the closest pool, or as a matter of fact, POI to it, okay? And I know this may sound confusing at this point, but just bear with me here for a second because it's going to get much clearer in a second over here, okay? So this is step one. Once again, you do not really have to worry that much about in terms of ATR, because most of the days it will be outside of the daily high and low, so it's going to be no problem for you. So understand step number one, which is this process over here. Now, step number two is going to be wait for the sweep, which essentially means you're going to be waiting for one of the two sides to be cleared. Whether that's the high or the low, you're not concerned with that. Once you see that one of the sides has been taken, you want to look for an entry point and lower time frame confirmation to go long and target the other wick high in this case, which would be the daily high sitting over here. So as an example, if you're coming into the charts and the market has formed bearish price action preceding this fully formed candle, and we see that we start breaking out of the daily low and we start breaking and closing below the daily candle low, you're going to be looking to your left for naked levels and order blocks, right, in order to take a potential entry once again once you see the confirmation, which we're going to be getting on in a second here. But just understand that. Now step number three is the understanding of timing. New York time, which means you're going to be using this during 13 GMT London, right, up until 16 GMT London close. This is your timing for executions, which is going to allow you a lot more simpler data to collect at the end of the day once you start trading the strategy multiple times. And it's going to be a lot easier because you're going to be having lots of volume during this period, and it's going to make your trading a lot easier. Okay, so that's step number three, the understanding of time. Now step number four, which we've already pretty much covered, is your execution. Execution at naked level stands for POI. Okay, and that's once again you looking to your left and trying to identify whether we have an area of interest, which may very well be in the form of a, sorry for my poor drawing, by the way, let's try to redo this a little bit better. It may well be a naked level. Okay, so let's actually draw this as a naked level. You can see the volume imbalance here. This is where you're going to be looking for that displacement only once the level has been tapped. Okay, once you get the level tapped, you're going to be looking for displacement, which is a move in the opposite direction to price, which is going to break multiple layers of structure, which is going to form an imbalance right over here. And let me actually use a different color. Let's do blue. It's going to form an imbalance, and you're going to be using that as your entry point, or you can potentially even use the naked high that forms over here with your stop loss being below the displacement low. Now your target, once again, daily candle high. If that's too far away and you feel that we may have still some room to the downside, you can look to simply target buy side liquidity that has formed on the way down. Completely up to you. I would suggest aiming for the daily high. It may mean you have a slightly lower probability of hitting it, but your risk to reward is going to be clear at that point, and it's going to be very, very profitable. So once again, that's step 4, execution at the naked level, POI. Stop loss below displacement low, target opposite pool. Opposite pool, which is going to be the daily high or the previous daily low. Very, very simple strategy. Very, very simple steps that you can replicate every single day in your trading. Once again, let's go through them rather quickly. Step number one, mark out the daily highs and lows of the previous fully formed candle. In this case, over here. Step number two, you're going to be waiting for the sweep, whether that is to the upside or the downside. You don't really know at this point, but all you can do is wait for that to happen. You're going to be trading this during New York time hours, not before that, so that you have some room to be working with volume. Step number four, you're going to be looking for a naked level or POI below the pool of liquidity that has been grabbed. Step number five, you're going to be placing your stop loss below or above the displacement high or low, and you're going to be targeting the opposite liquidity pool, which is going to be the previous daily high or the previous daily low. If you once again see that the previous daily high or previous daily low is too far away in terms of pips and movement, especially if it's above ATR or below ATR and you don't feel that we're going to be getting there today, you can use previous formed buy side liquidity pools or sell side liquidity pools that forms on the way. Right, in this case, as we take the previous daily high, you're going to see sell-side liquidity pools that form, which you can use as targets as well. So with all that being said, the strategy should be now very, very straightforward and very clear. And we're going to be jumping right back into the charts to look at a typical example of how this looks and how this works, which happened on Euro GBP just Friday. And it's going to be very, very simple to understand. So let me quickly pause the recording and I'm going to be jumping right back into the charts. All right, so here we are once again on the charts. I want to draw your attention to this. Whoops, let me quickly get out of here to this specific candle, which is going to be the one that we're working with, which is Thursday's candle. And once again, I'm not going to dwell too much on this. It's rather simple. So we're not going to be taking too long with this. Once again, you're going to go to your daily chart and you're going to denote the previous daily high and the previous daily low of the fully formed candle. So if you were coming in Monday, as an example, you're going to be looking for this daily high and this daily low. Now, just by simply looking at this time frame, I can see that below this daily low of this fully formed candle, we have a naked level of this wick high, which is at 139.422. So there's a high probability that if we open Monday and we start trading lower, we clear sell side liquidity and do not worry about this ATR because this is going to be resetting as the new candle opens. You can then look for a buy below the previous daily candle low into the naked level, okay? And this is where you actually see how you start putting everything together. Now, let's quickly go back to our example that we were covering. So let's remove the drawings and let's make sure we get the previous daily candle high and daily low marked. Once again, imagine this is the candle that we're looking to trade on a Friday. So we're watching Thursday, 9th of February candle. Daily candle high comes in at 141.340. We can denote that. And once again, you want to be precise with these price points, okay? So you want to make sure it's at 340. The low we can see in the top left corner is coming in at 433. 433. We mark that out. Now we have a range. We're then going to be jumping into a time frame such as the 15-minute, and this is what we see. Very, very straightforward. You're going to be scouting across time frames, and we can see that we have a naked level right over here above the previous daily candle high. If we were to have dropped down over here, right, if instead of taking the daily high, we would have went down and taken the daily low first, you would have been looking for a naked level as well on the downside. Well, what can we see? We can see that the closest naked level on before this candle forms on this time frame at the very least is on the 2-hour, and it would have been this level right here. You would have then been looking to buy below the previous daily candle low to target the previous daily candle high. Very, very simple. And you can see we get some sensitivity there, right? As price trades into this level, once again, this being the 2-hour naked high, reacts, and we move to the upside for about 60 pips before we continue dropping, right? Very, very simple. So going back to the example, you come in and you see that, okay, daily candle high here, daily candle low here. You look to your left and you look across time frames and you see, okay, so my closest naked level above the previous daily high is sitting right here. Let's actually make sure that this has not been tested, because I can guarantee this should have not been tested. You can see there's a tiny gap between this wick high and the previous wick low. So this is just a valid naked level. And as price trades into it, you get the reaction, right? Very, very simple, with your stop loss being above structure. So you would have entered the trade at the naked level right over there, with your stop loss being above structure and your target being the previous fully formed candle daily low. And that's how a typical trading day would look for you if you apply this strategy and concepts taught in this channel and overall this video. Okay, once again, just keeping in mind, if we have to be taking the previous daily candle low first, you would have then been looking at this level to go long. And you can see that we get a nice reaction coming in, right? Very, very simple. On this particular day, your entry, if you're waiting for the confirmation, you look at this candle, you say, okay, once this breaks, I'm looking for an entry point. And where do you enter? At a naked level. If you look here, you can see that once this breaks and it gives you intention that we want to move lower, you see the pullback into the naked level, or you could have been using this. And once again, you're placing your stop above the just formed high over here, which is going to be a new daily high. And you're going to be targeting the daily low sitting over here for roughly 90 pips. And this is how you could have framed this trade idea right over here, which is once again rather simple. So with all that being said, I hope that this video was helpful and provided you with perspective. Once again, I do not sell anything. I do this because I thoroughly enjoy it, and I hope this was beneficial to you as a viewer. So thank you very much for listening. I will talk to you guys very soon, and thank you for watching.